Accrual basis accounting. Hello everyone. In today's lecture, we will learn a concept that might be a little bit difficult, the accruals. If you understand the concept of accruals better, you will start to feel the magic of accounting to interpret the transactions in our business world. First, cash basis accounting versus accrual basis accounting. Transactions are happening every day. If a company does business online, which is called e-commerce, its transactions happen every second, 24/7. Since accounting is to record transactions, summarize business events, and report financial statements, what is the proper timing to generate the financial statements to external stakeholders? And how often does the accounting department issue financial statements in a year? To provide accounting information in a timely manner, financial statements are reported at regular intervals, meaning that a company reports accounting information at least once a year, let's say every December 31st, or once a quarter, let's say every end of a quarter, or once a month, let's say every month's end. These type of financial reports are called annual reports, quarterly reports, monthly reports, respectively. So practically, a company's business activities are divided into specific time periods, such as a year, a 6 months, a half year, a 3 months, a quarter, and a month. A financial statement that covers all business activities during 1 year is called annual statements, while the rest of other reports that cover less than 1 year are called interim statements. So our accountants have to prepare interim and annual financial statements every month, every quarter, and every year, based on a company's policy. Usually, we call a year from January 1st to September 31st as a calendar year. A company has the right to choose when to issue its annual report. For example, if Company A chooses to report the annual statement on every March 31st, so the year from April 1st to the March 1st in the next year is called the company's fiscal year. Therefore, we can say that any 12 consecutive months covered in an annual financial statement is defined as a fiscal year. The statements prepared during a fiscal year are called interim financial statements. Let's recall what we learned in the first lecture. Two of the accounting principles require an accountant to record a revenue when it is actually earned and an expense when it is actually occurred. This accounting principle is called revenue recognition and matching principle. Now we define the accounting systems that follows the requirement of revenue recognition and matching principles as accrual basis accounting. So you may ask me, are there any other accounting systems? What is the difference between accrual basis accounting and other accounting method? Okay, in contrary to accrual basis accounting, we have another accounting system called cash basis accounting. Cash basis accounting recognizes revenue when cash is received and expense when cash is paid. What does this mean? For example, let's say you paid 30 yuan to a video website for 1 month's membership. Can this video website record the 30 yuan as its revenue when it received your money. For cash basis accounting, yes, it will recognize the revenue when it receives the cash. So this bookkeeping process is based on when receiving or paying cash. That's why we call it as cash basis accounting. On the contrary, if the video website adopts the accrual basis accounting, it should not recognize the revenue of 30 yuan until it has fulfilled the obligation to delivering 1 month's video access to the customer. Let's say it can only record the revenue after 1 month. So the basic principle of accrual basis accounting is to record revenue and expenses based on whether the contractual obligation and right have been exchanged, not based on whether receiving or paying cash. Well, in general, most accounting standards do not permit a company to use cash basis accounting to generate formal financial statements. So this section, we give you a brief introduction of the difference between cash basis accounting and accrual basis accounting. Thank you for watching this video.